The market isn't just a place where money changes hands. It's a battlefield where psychology gets tested every single day. Think about it. Everyone enters trading looking for the perfect strategy, that magic formula that's going to make them rich. But here's the truth most traders don't want to hear. There is no perfect strategy. You can have the cleanest chart setups, the smartest indicators, and even the most advanced algorithms. But if you don't have the confidence to trust yourself when the heat is on, it's all worthless. Why? Because trading isn't only about finding trades. It's about executing them, and execution is where most traders fail. You've probably felt it. That moment where your setup is there, your system is telling you to pull the trigger, but your brain says, what if it's wrong? What if this is the one that wipes me out? And you freeze, or worse, you hesitate and watch the trade run without you. So in this talk, I want to challenge how you think about trading. I want you to see that confidence is the glue that makes any strategy work. Without it, even the best system will crumble in your hands. With it, even a simple, average strategy can make you consistently profitable. This isn't about arrogance. It's about building the kind of trust in yourself that allows you to stand tall in the chaos of the markets. And by the end of this breakdown, you'll understand why confidence matters more than your trading strategy. Every trader at some point becomes a strategy hunter. It's almost a rite of passage. You scour YouTube, binge-read trading books, buy that secret system course that promises 90% win rates. You convince yourself, if I just find the right strategy, then I'll finally make it. But here's the uncomfortable truth. There is no holy grail strategy. Every system has losing streaks. Every method will face periods where the market conditions simply don't match. Even legendary traders admit that half their trades don't work out. So, if the strategy isn't the secret sauce, what is? It's confidence. Let me give you a simple example. Imagine two traders with the exact same system. Same entries, same exits, same rules. Trader A executes with confidence. He trusts the process, he takes the trades, and when losses happen, he shrugs them off because he knows it's part of the game. Trader B, on the other hand, hesitates. He second-guesses every setup. He enters late, exits early, skips trades, and then chases when it's too late. Same system, completely different results. This is why strategy obsession is such a trap. Traders think they lost because the system was broken. In reality, they lost because they were broken inside the trade. They didn't have the conviction to execute. So the myth of the perfect strategy keeps traders running in circles. They switch from scalping to swing trading, from options to futures, from indicators to pure price action, all in the desperate hope that the system will save them. But the market isn't testing your system. It's testing you. And until you develop confidence, you'll always sabotage even the best strategy. That's the first mindset shift. Stop looking for the perfect system and start building the trader who can execute any system with discipline and conviction. When most traders talk about having an edge, they're thinking about a mathematical advantage, probabilities, risk-to-reward ratios, win rates. And yes, those matter. But here's the overlooked reality. Confidence is the real edge. Without it, even the math won't save you. Think about this. Trading is not about knowing what the market will do next. Nobody knows that. Trading is about managing uncertainty with consistency. And confidence is what allows you to keep showing up, trade after trade, regardless of the outcome. Confidence builds consistency. And consistency is what compounds into results. You can't build a track record without the ability to keep executing your plan, even when it feels like the whole market is against you. Here's the magic of confidence. It transforms your relationship with risk. A trader lacking confidence looks at risk as a threat. They panic when price moves against them. They second-guess whether they placed their stop too tight or whether they should close early. But a confident trader sees risk as simply the cost of doing business. Just like a shopkeeper pays rent, a trader pays risk. It's not personal, it's part of the game. Let's borrow an analogy. Imagine a pilot flying through turbulence. The passengers may panic, but the pilot doesn't. Why? Because he trusts his instruments. He knows that turbulence is normal, and he has trained himself to stay calm. That's what confidence does in trading. It stops the turbulence of the markets from knocking you off course. Confidence separates reacting from executing. The reactive trader lets emotions dictate decisions. The confident trader executes their plan with precision, regardless of temporary outcomes. That's the difference between gambling and professional trading. So when people ask, "What's your edge?" Sure, talk about your strategy, but understand that your true edge is your ability to trust yourself in the heat of the moment. Because when confidence meets a system, that's when consistency and profits are born. If confidence is the trader's greatest weapon, then lack of it is the silent killer. And the truth is, most traders don't blow up because their strategy was wrong. They blow up because their mindset sabotaged them. Let's break down how this happens. The first way is second-guessing. You've seen it, maybe you've done it. You enter a trade, but the moment price ticks against you, even slightly, you panic. You exit too early, only to watch the trade reverse and hit your target without you. Or you refuse to exit at your stop, hoping the market just turns around. And you end up bag-holding a loss that eats your account. The problem wasn't the strategy, it was the lack of belief in it. Then comes strategy hopping. Lack of confidence makes traders restless. They blame the system, not themselves. So they abandon one approach after a few losses, jump to another, then another. They never give any strategy enough time to play out. In reality, what they're chasing isn't a better system. They're chasing the feeling of certainty. And since certainty doesn't exist in trading, they're stuck in a cycle of endless searching. And then there's emotional whiplash. Fear makes you hesitate. Greed makes you chase. Regret makes you revenge trade. Without confidence, you're constantly at the mercy of your emotions. The market doesn't even have to beat you. You beat yourself before the trade is even done. Here's the brutal reality. Markets exploit doubt. They reward conviction and punish hesitation. The trader who hesitates gets the worst fills, the worst exits, and the worst stress. Meanwhile, the confident trader executes cleanly, accepts losses quickly, and positions themselves for the next opportunity. So when you look back at your trading mistakes, ask yourself, was it really the strategy? Or was it your lack of confidence in executing it? For most traders, the losses didn't come from bad setups, they came from bad psychology. And until you fix that, no system will save you. Confidence doesn't just fall out of the sky. It's not something you wish into existence. It's something you build through habits, repetition, and mental conditioning. And just like muscles, confidence grows stronger the more you work it. Here's how. 1. Mastery through repetition. Confidence comes from competence. The more time you spend on the charts, the less intimidating they become. Journal your trades. Review your setups. Study your mistakes. Every trade you take, win or lose, adds to your experience bank. Over time, your brain starts to recognize patterns automatically, and that recognition breeds confidence. The market becomes less of a mystery and more of a familiar playing field. 2. Risk alignment. Here's a big one. If your position size is too big for your comfort level, you'll never trade with confidence. You'll be glued to every tick, panicking at every candle, and second-guessing decisions. Confidence grows when your risk per trade is something you can emotionally tolerate. Even if the trade goes wrong, you know it won't destroy you. That safety net frees your mind to execute properly. 3. Process over outcome. Most traders attach their identity to wins and losses. One winning trade makes them feel like a genius. One losing trade makes them feel worthless. That's a confidence killer. The shift happens when you stop judging yourself by results and instead judge yourself by execution. Did you follow your rules? Did you stick to your plan? If yes, then you did your job. The outcomes will take care of themselves. 4. Mental conditioning. Confidence isn't just technical, it's also psychological. Athletes use affirmations, visualization, and resilience training to perform under pressure. Traders can do the same. Imagine yourself executing flawlessly. Visualize staying calm when the market moves against you. These mental reps train your brain to trust yourself, so when the real trade comes, you're ready. At the end of the day, unshakable confidence doesn't mean you never doubt. It means you've built enough trust in yourself to act despite doubt. And when you combine these practices, something powerful happens. You stop needing the market to reassure you, because you've already built that reassurance within yourself. Now, here's the tricky part. Confidence is powerful, but too much of it, unchecked, turns into arrogance. And arrogance in trading is like playing with fire in a room full of gasoline. You might win a few trades, you might even feel invincible for a while, but eventually the market will humble you. Confidence is knowing you can handle the trade. Arrogance is thinking you can control the market. One keeps you disciplined, the other destroys you. The best traders have what I call the trader's paradox. They're strong enough to trust themselves, yet humble enough to respect the market. They know they're skilled, but they never forget that the market is bigger than them. Think about it, professional pilots are confident in their training, but they still check their instruments before every flight. Surgeons are confident in their hands, but they still follow strict protocols. Why? Because confidence without structure is recklessness. For traders, this balance comes down to risk backstops. A confident trader sets a stop loss, not because they expect to lose, but because they respect the possibility. They set a daily loss limit, not because they doubt themselves, but because they know no edge works 100% of the time. Overconfidence whispers, double your size, you can't lose. Humility answers, stick to your plan, protect your capital. And it's this inner dialogue that separates professionals from gamblers. So remember, confidence should be the engine that drives your trading, but humility is the steering wheel that keeps you on the road. Lose either and you crash. Keep them in balance and you build a career that lasts. Here's something most traders don't realize. Strategies have an expiration date. The markets are living, breathing ecosystems. What works beautifully in one market cycle might completely fail in the next. The setups that printed money during a trending market often collapse in a choppy one. Even the world's best hedge funds adapt constantly, tweaking models, retiring old systems, building new ones. So if strategies come and go, what really keeps a trader in the game? Confidence. Confidence is portable. It travels with you from one system to another, from one market cycle to the next. A trader who has confidence doesn't panic when their strategy stops working. They pivot. They adapt. They say, all right, this playbook isn't giving me results right now. Let's adjust. Let's retest. Let's evolve. Meanwhile, the insecure trader clings desperately to a failing system or abandons trading altogether, convinced the game is rigged. Think about the veterans who've been trading for decades. Do you really believe they're still using the exact same setups they used in the 90s? Of course not. The tools changed, the technology changed, the markets changed. But what didn't change was their ability to trust themselves through uncertainty. That's confidence. That's the anchor. Here's the truth. If you only rely on a strategy, you're at the mercy of the market seasons. But if you rely on confidence, you'll outlast those seasons. Because confidence is what lets you stay calm during drawdowns, stay focused while learning new methods, and stay resilient when others quit. Strategies make you money today. Confidence keeps you in the game for tomorrow. And in a profession where longevity is survival, that makes confidence the ultimate asset. We've covered a lot, but if there's one truth I want etched in your mind, it's this. Strategies may open doors, but confidence is what carries you through them. You can spend years chasing the perfect system, tweaking indicators, backtesting, or copying other traders' setups. But without confidence, it all falls apart the moment real money is on the line. The market doesn't just test your charts, it tests your conviction. And time after time, the traders who survive aren't the ones with the flashiest setups. They're the ones who trust themselves enough to execute, adapt, and keep moving forward. Confidence matters because it turns you from a passive observer into an active player. It stops hesitation. It silences doubt. It makes you consistent, and consistency is what compounds into success. But remember, confidence isn't arrogance. You can't bully the market, you can only respect it. That balance between belief in yourself and humility before the market is where real power lives. It's what allows you to take risks boldly, but also protect yourself wisely. So here's your call to action. Stop hunting for the next holy grail system. Start building unshakable confidence in yourself. Journal your trades. Align your risk with your emotions. Focus on execution over outcomes. Train your mind the same way athletes train their bodies. Because once you trust yourself, the strategy you use almost doesn't matter. It will work because you will make it work. At the end of the day, strategies can make you money. But confidence? Confidence is what keeps you in the game long enough to see that money turn into wealth. And that's why, in trading, confidence matters more than your strategy.